Hello, hello, hello. Happy OPEX Friday, July OPEX. I think there's like 2.4 trillion notional between all the options expiring today. I think this is the biggest one ever for July. So, we got that going on. How's everyone doing? Good morning, Patrick. Hey, Christo. Hey, everybody in the background. Oh, not should self-aware Platinum Terminator is back in full effect. Okay. We only have rig counts today. That's it. So pretty much, if you're not a crude trader, you're not paying attention to anything really in the news besides any scrolling headlines. Tech got hit pretty hard yesterday, but a lot of tech didn't break down below key levels. Tesla did close below its daily rotation zone, but not the key level. I'm watching for a bounce back in a lot of these things and see if they set up bigger short patterns. Nothing's set up yet. Really strong. NVIDIA has a little potential double top that could be invalidated today. Overall, you see mega caps and tech strong rally back. American Express had earnings this morning and missed on revenue, and that's down 260 basis points. What else do we have? Not much. CSX had earnings yesterday after close, back down 3.74. Com services, consumer cyclical, and technology, a lot that got beat up yesterday, is leading the charge back in the OPEX today. Fed watch for next Wednesday. Remember, that's the rate hike. We're still at 99.8 for the rate hike next Wednesday, so that's still fully baked in. Fear and greed, even with the pullback in yesterday's NASDAQ, is still in extreme greed. So that's where that sits right now. Remember, OPEX Friday, the two key strikes I'm watching for are if we pull back, and that would be 45.50, or in our rally, even if we get above 4,600. Going to watch for a stall out and really close with the cash closing around 4,600 unless we get some severe momentum today. And as I mentioned before, the American Express was a beat on EPS, a miss on revenue, and is down. So, good morning, Jacob. Good morning, Sterling. Hey, dream come true. Any thoughts on the black screen deal with Russia withdrawing? It's going to keep upwards pressure on, especially things like wheat. So it's really not. It's besides a trading perspective, it's not good for a world hunger perspective. And India's cutting off a lot of non-basmati rice export, so that's going to get interesting too. It's going to get very interesting again. Uh, I don't have a lot of time to stick around today. I didn't want to skip the live stream though, so let me just get through to this. Hey, good, Anissa. We can talk more about maybe I'll try to get Bob on sometime next week, maybe before the Fed decision, and see we can ask him some macro fundamental questions on that. What am I watching for so far? I mean, it wasn't a huge sell-off yesterday in the S&P even. I mean, what were we down? 69 basis points. Today it's roughly snapback already wiping it out. I'm watching if we start getting a 4-hour close this morning above 45.89. The 87.5 is 46.02. And, anything above 45.96 sets up a double top pattern. May never trigger because the rally could keep marching on. Above, if we take out yesterday's high on a super strong rally, the next target is 46.21. Key support is back down at yesterday's lows with the rising rotation zone, 45.57. So if we did approach 45.50, I'd still be watching if we does have some rollover move, although there is nothing in news-wise that's expected that could really shake the markets downwards. But the key support level is this 45.57 to about 45.65. That's the key support level. That would really have to break in order to get a pin below 45.50. What else do we have? So I'll be watching, but we'll have, even if this comes up here, that will be something to potentially watch for next week with a more severe topping pattern. Next key level, remember, is the reconnection with the 87.5 at 46.45. NASDAQ had the bigger sell off into the rotation zone yesterday. Into the rotation zone, I am watching. I'm pretty much using the harmonics back on the way up. This 15,740, which corresponds to this little minor breakdown zone you see right over here from Tuesday that was broken yesterday. Then 15,805, then 15,870. A close above about 15,870. Then next week, I doubt it would happen today, but next week, then I'd be targeting the 15,933 and 15,998. So those are the levels. The key support coming in for me is 15,590 to about 15,610. So that's where that sits. And if we roll over again, the next key thing to consider next week is this prior breakout zone in the bottom of the rotation zone. And so far, this 4-hour pausing area, which gives us a cluster right around 15,400 to 15,420. The Dow, again, we had a pretty decent rotation into the Dow yesterday with the S&P and NASDAQ down, and Dow was closed up, little pullback into the close, but the reconnection level with the Dow is 35,807 to be specific, and we got 35,700 is the next harmonic target. So do keep that in mind. Not really any significant topping pattern. The only thing I'd watch for is if we broke back down about below about 35,375. Russell, so far wiping out a lot of the sell-off yesterday. Again, you can always do your harmonics. Right now about the 62.5. So 1998 and 2002 would be the next minor levels I'd use intraday. Anything above 1998 sets up a potential double top. And then we can also use these short-term reverse harmonics if it were to break, not just for today, but next week, break the high of 2007, the recent swing high, 2011.5, 2016. Well, I don't know if I will have time to get to a lot of these stocks there. Let me just get through a couple other things. The VIX, even with that move down the NASDAQ yesterday, and I know this is the VIX based off the S&P, but we can look at the VIX Q. But still, there's no fear in this market. No fear. DAX still sideways move, caught between the 62.5 and the 75. If we break above the 75, 16,445. Holding against key support right now. Notes triggered the little minor double top and hit the first target yesterday. So triggered and hit the first target, so it could only been done intraday and then carried on the close. Little snapback rally this morning. Going to be watching for another continued rollover next week to finish the targets there. And just a side note, the rally back up between the lows on the 6th of July to the highs of the 18th. The double target and the 50% retracement is both the same thing, 111.22. 10-2s with that triple bottom pattern, but nothing new to talk about there. Dollar index, after triggering the double, going full blown, stalling out at the prior breakdown zone right now. So that little double bottom's completed. In order to carry anything forward, it would have to close, from my perspective, above this 157 area, and then 101 would be the next target. Crude is now the double top, which never triggered or confirmed, off the table with a clear triple top. If we break above the 200, about 77.50, I'm then targeting 78.65 to 79.04 as a short-term breakout play. Not expecting that to trigger today, but we'll be watching that next week. Your major support coming in at 74. Gold yesterday triggered the double top and moving on back down 1958. At first target's hit, second target is 1962, final target is 1958. So that's just a minor pattern, and that's a pullback into the first cross of the rotation zone. Other than that, there's no major pattern. What else do we have? We have the yen, which a couple days back on Wednesday triggered the double bottom pattern, finished it this morning. So that is done. The key level for a continued rally, it has to close above 142.10. Not necessarily today, but that's the key level. And right between here, 141.23, 22, and about 142.10 is a potential shorter term rollover zone. So for any long plays in the US dollar, Japanese yen, personally, it would be a raise a stop level for me. Euro, pulling back into the rotation zone. Going to watch for a rotation up starting next week, possibly. But other than that, there's not a. We're getting to daily cycles. We could still see a little farther pullback, just as a little more run in the dollar. But the major support areas coming in at about 110.55. Pound pulling back all the way to the prior major breakout zone and between the 50 and the 62.5. So I will be watching with cycles at the bottom going into next week for a short-term bottoming pattern. But nothing fantastic today. Bitcoin, nothing. Spiders and the Qs. Spiders. Yesterday, pulling back to the prior little minor breakout area so far today. Up at 454, so any downwards action would be for gap fill to 452.18, and then the major support coming in about 451.50. Up here, above here, I'd be looking we're even trading above yesterday's open, so I'd be looking for the magnet price of about 455.20 on any rally, and then just use your pullback harmonics. So you get that at least maybe a 4-hour close about 454.56, or even a 1-hour close. It could be done with 455.18, 455.81. And look where that 455.18 is roughly in line with the 455.20. So those would be the levels. That's exactly how I would set it up after knocking off that harmonic. Now, raising this up and going to the most recent swing. That gives us the cluster 458.85 to 459.35 if this takes out and does not form and trigger a double top pattern. The Qs with the bigger pullback here. Now we get a stronger pausing bar because that last one was weak. Right overhead with the Qs is the 87.5, 389.40. Right now, if it rolls over, 376.76 would be the first target price, and then these two lows right about 375.50. The rally targets for the Qs. Right now, we're trading 379.58, 380.32, 381.85, 383.38 on at least a 4-hour close above 383.38. I'd be watching for it to get into double top territory early next week. Tesla, which had the big sell-off yesterday, first close below the daily rotation zone since the cross of it back in mid-May. So this was some technical damage done. Going to be watching for a snapback rally and then a potential another rollover play. But this secondary reaction, something like Tesla, is going to be very key. And I'd use the harmonics from the highs on Wednesday to yesterday's lows. And those would be the key levels I would be utilizing. Just check. NVIDIA has the, I don't think we traded below 61. Did we? 60? No, it did not confirm. It did not confirm. It missed by a penny. So I'm watching this little minor potential double top pattern. But so far today, we are a gap up. If we get into triple top territory, it will be off the table, and that's a lower probability one. The Fed meeting day is next Wednesday. Hey, thanks, Richard. Let's look at Meta real quick. Meta. There we go. Helps if I do it the right way. Yes, Meta did trigger a lower probability double top because it's against the rotation zone. So far, to invalidate the pattern, there is no stop reduction yet. So to invalidate the pattern, it would have to get back above 313.44 on a closing basis or 315.19 on a trade through basis. So any snapback rally is a long way off from invalidating it today. Those targets would be 298.95, roughly 296, and then 293.20 are the rough targets there. And here we go. Palantir's just pulled back to the daily rotation zone. I'd be watching again. It's pretty much the same setup on a lot of these. I would be utilizing the harmonics, trading 1743, 1750, 1774, 1799. What needs to take it into potential topping territory is a rally back above 1849. It's coming into a major support zone. If it does break lower, your major support zone that it starts doing some technical damages if we start breaking below 1690. So that's your key level you want to watch for. 1 hour bull flag on US dollar Japanese yen. Where's my US dollar Japanese yen? Yeah, so far that could be a flagging pattern back to the 1 hour rotation zone. It would roughly have to get back above 141.75 to trigger, unless you were trying to buy a support here with the 1 hour rotation zone. But that would be the confirmation on the breakout above the flag. So yeah, that can qualify. Hey, Christoph. So that's where we sit. Looking at Roblox, do you see a potential weekly double bottom or potential? Oh, let me see. Then that's the last one because I got to run. Do I see a weekly? Ugh. No, there's no, oh boy. That's just a mess. Let me take a look at the monthly. You technically would have a monthly double still. I would only look at that as a monthly double. So it would need a monthly close above the high of 53.88. Any trade above there, and that's a fair way off from triggering. That's would not trade that as any kind of head and shoulder. You see here, because this would have to be the head shoulder. This shoulder dip below the head. It's a double bottom pattern with this being the peak, and now it's just basing. If it rotates back down to these lows again from December, it would be off the table. But that's why I'd only treat that as a monthly pattern at this point. It's just too gosh darn sloppy, and on a weekly, it's starting to extend too far to the right. So that's why it would need the monthly close. You're welcome, Chris. So that pay attention to that. When things, if it's still valid on the higher time frame, it means it needs to do more work. You're less likely to be sucked in. That's why I need the higher time frame close. Hey, Anissa, you're welcome. Happy Friday, everyone. Thank you for tuning in. I will see you all next week. Bye for now. Have a safe trading day. Remember to be prepared for some quick potential moves this afternoon going into what did I say? I just forgot it's a huge July OPEX, one of the largest ever, if not the largest ever. So talk to you all later. Bye for now.